It is November 7th. Welcome to today. I'm born to be free. That is, I accept checks and diamonds from anybody that wants to pay me to sell out my country, Mark Putrino.
Well, no, I was talking about me. I accept checks.
You accept checks and diamonds. So it's not selling out his country. Mark just accepts all donations.
Diamonds, all right. This is kind of a little, I don't know, not really an aside because it applies to the market, but this is a dude I did some work for like 5 years ago, and he was pretty big, and now all of a sudden somehow he's doing this newsletter which basically sucks. And it just doesn't seem, it seems very strange to me. Like maybe he blew up and he restarted. But let's see. Latest Seeking Alpha podcast, an extremely important week ahead of data, understanding technical analysis. T-Bills, Wall Street Breakfast, 5.75 million followers, and there's only 6 likes. That seems kind of weird. All right.
Well, you can buy followers, and I'm sure some people do that.
Yeah. All right, T-Bills yielding. So when was this? November 5th? So this was 2 days ago. Yeah, because yields are down pretty significantly, and that's one of the reasons why the market's been going up. But this is like, you see how we're consolidating here? Remember, well, just pretend this is a stock. You see how we're consolidating? We had a big sell-off and we consolidate.
Yes.
So if this starts to move higher again, and I think there's a good chance that it does, because the government's is issuing all these bonds between now and whenever. I saw one of the few people on Fox Business News or on any financial station that I actually listen to, this guy Penn Polakari, and he was talking about all the bonds that need to be issued between and now and whenever, 6 months, and people don't want them because the United States is just losing credibility, so they have to raise interest rates. So
right.
So this could be, all right, we got our big move higher, we got our consolidation, and now we'll see. I mean, there's 2 things going on. One is we got to really watch this. Okay, if this goes higher, negative for the market. If it goes sideways and we consolidate, the market's got a lot of overboughtness. It needs to kind of shake out, right? Like being overbought or oversold. It's like it's like a rubber band, right? It gets stretched out, but then it doesn't need to snap all the way back. If it gets slowly unstretched, sometimes it just kind of hangs out.
Good morning, Avi.
Hello, everyone. Still kind of far away from that Bollinger Band, so I'm not going to bring that up. But again, remember, we're overbought. If you look at some of these, your standard indicators here, it's not showing as overbought. And there's a reason for that, even though we are overbought. It's that this RSI indicator is based on 14 time periods, so it's measuring where we are from here to here. And the Bollinger Bands is measured based on the 20-day moving average, which is probably somewhere up around here. So this is an example where something can be overbought, but it's not showing up on the indicators. But if you understand the indicators, the nuances of how these indicators are constructed, then you would understand it. If I was to make the RSI, how far have we moved in 4 days? So let me just go change the default here.
Good morning, Ahmed and Brandy. How are y'all today?
All right. See, now just say I change it to 4 days, it shows it's overbought. Remember, RSI, it's measuring from how far we have moved from time period A to time period B. And if we end up at time period B exactly where we started in time period A, it's just going to show up as neutral momentum. It's a measurement from point A to point B. So I can look at this and I could just tell from experience that it's overbought, because look at the gapping here. This is really aggressive buying. What you really want is markets that go up nice and slow. Right. These are markets that continue for a while. When you get things that rip higher, And I don't mean like you don't want it because as a trader, this is the type of stuff we live for. But like longer term, markets are healthier when they go up slower because things like this just tend to snap back. So we got up to this important 437 level, right? Yesterday's high trade was 436.15. So that's a pretty good trick right there. 15 cents on a $430 security. How about that? That's a good trick. All right. So anyway, the trick is not that I'm a magician, although I wish I was if I could do it again. Look at that. So support becomes resistance, and then resistance becomes resistance. We tend to run into resistance at former resistance levels because you got people that bought a pair that are finally able to bail out at break even now that the price has come all the way back. So you're going to have these remorseful buyers selling. So that's the S&P. Now, if we look at the vast majority of the market, here's our tech sector. We could see that this is getting overbought, even on your traditional standards or whatever traditional. So it's above the resistance and it's holding up there this morning, but you got to just keep this in scale, right? This is 171. We're at 173. It's going to take a few days to play out. And if bonds start to rally, let me say this. If bonds start to sell off, that'll make rates go higher, and that'll be negative for the market. And I know we looked at the interest rate chart here, but remember, people don't trade interest rates. People trade the bonds, and that's the inverse chart. So if we go inverse, right, look at it. If we don't get through this resistance, I guess I can get rid of the circle here and this. If we don't get through this resistance, then that's going to make rates go higher as the bonds trade lower. And then that'll put pressure on equities. So let me just take a look at this. What's going on here? All right. So bonds are up. Okay. So this has started trading. So bonds are up. So that's going to push. I'm just confusing myself there. All right. So bonds are up. So that's going to make yields go lower. So that's going to be good for stocks. So that means stocks will probably hold up. All right. If I'm confusing you, just think of the opposite of what I'm saying. All right. So let's see. So this is the actual bond here. Oh, wait. No. All right. Now I know why I'm confused because I did it in a revert back. All right. So this is an actual bond. This is the bond ETF. This is not the yield. So as we can see, we got up to resistance. We sold off. All right. So if this goes higher, that will push rates lower, and that's good for stocks. So it's kind of an unusual time that bonds and stocks could go in the same way. All right. So then we're going to go check out our healthcare sector. Traditionally bonds and stocks kind of go in different ways, but we're not at a typical time. This is kind of like untested territory because, who's been around long enough to remember what inflation was like in the trading world 40 years ago? Not too many people. All right. So that's our tech sector.
I was wanting to trigger. Hold on. Let him run through the sectors, Avi, and then he'll come back and let you know.
All right. Here's our healthcare sector. Well, we start looking for when things reverse back through these levels here. Like, see this 127.40. So we're overbought. There's a chance this consolidates and stays steady and ends up moving higher. But I think if it was me, I would stay on the sidelines right now. There's really no need to jump in and buy it, because if it consolidates, it's going to be at the same price in 3 or 4 days that it is now. But if all of a sudden this starts to reverse and gets back below this like 127.40 level, that would be a good trigger there for the healthcare sector. Getting back below this former little peak here, so back below 170.150 would be a good potential trigger there. The idea is that we're anticipating that there could be a reversal. The reason why is because a lot of the sectors are at resistance and overbought. Resistance is like a large group of investors or traders who are trying to sell at or close to the same price. Overbought conditions get the attention of momentum traders who are like, oh, hey, this is overbought. Let me go take a look at it. Overbought things tend to revert to the mean, which means they tend to go down. A lot of strategies on Wall Street are built on this concept of reversion. Now, financials here are looking actually kind of weak because see where we are? We're back to this important 33.58. This 33.60 level goes all the way back to, I'm actually going to try to clean this up, make this a little bit easier to read for you all.
Hey, while you guys are waiting for Mark to do that, would you smash the like and share the screen? It really helps us. Subscribe as well. Thank you very much.
Yeah, start checking out my website because I'm going to start posting on it every day. And
we're going to do a personal blog and then a market-related blog every day. And then there'll be videos going back to the YouTube channel. We've just been focused on the school so much that we've allowed the YouTube channel to kind of slide off because we are a two-man band. And so we will get this all worked out, guys, but the YouTube channel will start getting more content on it as well.
Beautiful weather. Well, hello, Brandy. And Hamed and Avi and Alba.
We got Steven, Windward, and Dive.
Mr. Steven. Yeah, I just can't see.
Oh, and we got Jeannie and Jim too.
Well, up here it's pretty dreary, but it's cool though. I kind of like it. It's dreary and leaves are coming down. Friggin' Jets got humiliated again last night.
Hey, so I was watching that they were going to make Bridgeport completely redo the election. Good morning.
Bridgeport is a Bridgeport is. I'm kind of fascinated with Bridgeport. It's only about 20 minutes from where I live, maybe a little bit farther. But it's like the mayor was. I mean, I love this guy. I got to admit, I really like him. I can't wait till there's a book about him or a movie about him. He was, he got arrested. He was the mayor before he got arrested for corruption. But stuff that all these mayors do in these small cities. They give contracts to their buddies. Went to jail for 7 years, gets out, and they re-elect the mayor. So, but now he's really supposedly doing a lot of good things for the city. My sister is a school psychologist in one of the real ghettos areas, and Bridgeport's a bad. There are places the cops don't even go.
Right.
But yeah, supposedly he's doing a good job.
Well, out of a city that huge, there was only like 7,000 votes.
Yeah, there's all this local ballot stuff, and dude, I went back in. I don't know.
They did it in my city as well. I used to watch it all the time.
Back in like 2012, I went to go vote. And, it was at the local public school. So, the guy who's out there, like, kind of supposed to be guiding traffic, is wearing an Obama for president button. Okay, so this is a dude who's working at the polls. He's supposed to be neutral. So then there's this big line, and he comes out and he says, all right, if you're voting Democrat, go on this side of the room. If you're voting Republican, go over to this side of the room. Like, that was his solution to breaking up the crowd. And then, like, one of the senior people came over, and I saw whispering to him, and then he took the thing off. But, a guy like that would balance stuff. There's no doubt about it.
Well, that's it. It's not a party issue. It's an integrity issue. And if the people in there that are in charge of keeping it clean or don't have any integrity or lacking character, it's always going to be a fraudulent election, no matter where you're at. And then again, if the higher ups are looking for people of less credulous
well, I think the guy was just dumb. I mean, if he was really dubious, he wouldn't have been that obvious. He wouldn't have been wearing a Barack Obama, button. But anyway,
Mark, a lot of people don't care anymore.
Well, all right. So anyway, this financial sector is still, I think, the important thing to watch here.
Number one thing we need,
because we're right at this 33.58 level, and this price level, look, it goes back all the way to last December. And it's really clear and precise. So this is right where we are this morning. We're sitting right on it. So you can't even see it because it's underneath this black line. See the little red dotted line there?
Yeah.
So this is probably the one thing to watch. I mean, as goes this, I think the broader market will follow. And I just want to see what the banks industry looks like.
Same
Yeah.
thing.
Now look at this. All right. So this is set up for a reversal here, and this is over the Bollinger Band. So let me explain what this Bollinger Band is here, because these are really pretty effective. It's a pretty effective indicator, or I don't even know what you call it, oscillator indicator. All right, so this red line up here is 2 standard deviations above the 20-day moving average, and I guess I'll put the lower one into the red one is 2 standard deviations below. Now the idea is 90% or 95% of trading is supposed to happen within 2 standard deviations of the mean. So if we exceed this threshold, people expect a reversion. It's just a different way of measuring if something is overbought or oversold, right? So look at this. We got above it back here on the 17th on Tuesday, sold off. You can see, like, sometimes it doesn't sell off, but it tells us we're going sideways. But anyway, back here, we got above it and we sold off. So this is overbought. Now, the other thing that strikes me here is actually there's a couple things. All right, so I'm going to get rid of that, and I'm going to make this thinner so it's easy to read. So where are we? We are at this price level, $38, which is an important price level. All right, you guys see it's above the Bollinger Band, right? I just want to just want to make it easier to read by taking that off. All right, so we can see 38 was resistance, support, resistance. So now what has happened? We've gapped up. We've gotten to $38, which is a resistance level. You can see the last time we got to it here was resistance. We're overbought. And look at how we have this little like reversal pattern going on here. So think about this. The blue team is in charge. And then all of a sudden yesterday, the red team makes a stand and pushes us all the way back. And notice the important thing is that notice how we closed below the prior day's open, right? So these are 3 things that tell me that these banks could be going lower. We're overbought, we're at resistance, and we had a little reversal pattern here. Now, this is the industry, which is in the financial sector. So if we're really focusing on the financial sector, this is something we would want to focus on here. So this could be the key to the entire market right here, what goes on in the banks.
So those are the bigger banks, not the regional banks, right? That's KRE is the regional banks?
No, KRE is the regional banks. Hold on one second.
Okay.
Yeah, so KBE, this is the broad one. And for whatever reason, when they develop this benchmark, all the banks kind of have the same weight. So this isn't really dominated by 1 or 2 companies. And I don't know why. I don't know whose decision that is. And then KRE is the regional banks, which, I mean, as you can see, it's pretty darn similar. But these are like the more of like the local smaller banks as opposed
to Bank of the Ozarks and stuff like that.
Yeah, it's not like JP Morgan. Right. And then there's another banking one too, which is it KIE or is that insurance? KIE.
Yeah, that's insurance.
Yeah, this is insurance. So this is part of the financial sector. But right now, I think these are industries. This is the insurance industry. And this is the bank industry, which is part of the financial sector. But anyway, I think it's really important to key on the financials. And I mean, look at this. You don't really need to be a chart guru to see, right? Clear resistance back here, clear resistance here, clear support here, clear resistance there. Now, not only did we get to resistance, we're really overbought. We're above that 2 threshold or that 2 standard deviation threshold. And we've had this reversal pattern. So maybe just think about it as like, I don't know. I mean, I think a football team is a good analogy. Like you're pushing the ball down the field and the blue team's got all the momentum, but then the red team makes a stand and looks like it's going to turn it around. And the thing I'm kind of keen on here is that yesterday's close is lower than the prior day's open. So the sellers pushed us through that opening price. Most volume trades on the open or on the close. So there was a good chance that, well, actually, let's take a look. This is, whoops.
Remember, guys, when you're wanting to know what the holdings are in these these different different spiders, you can look up the holdings page, and then you can find out exactly what's in there. And we'll go through them in a few minutes.
All right, so if I look at the 1 day, all right, so here is the opening price, right, 2 days ago. And then notice how it becomes important. It becomes resistance. All right. So this is why if we trade through the prior morning and then we don't get back above it, that's a signal that the trend is going the same way, because we got through the important price level. This is only 38 to 38.10, so we can't get too confused. But let's go back to here, right? So the idea is that it's important, if you're a short-term trader, to realize or to pay attention to if we get through a prior day's opening or close. That's important. So this red line is Friday's opening.
Yeah.
So you see here, we got down to it. It turned into resistance, and then it stayed below that. So that was a sign that that was a good sign that there was a reversal underway. And sure enough, so this to me looks like it's going to come in, and that's going to bring in the financials, and that's going to bring in the broad market. Or, I mean, I can't say that with such certainty. I would think there's a good chance that that's what happens. All right, now we can go look at our consumer discretionary sector. And here, this is kind of just pinned at resistance.
Mark, so, we got a question from Maru down there. Winward Smith is Maru. I'm sorry. He's asking, should we mark the prior open or close?
Well, it's a little. Well, I would have to say it's a little different, I think, than looking at the sectors, and I'll show you why I think that. That's a good question, though, because I know what you're getting at. All right, now you see here in this particular industry, look how similar these weightings are. So, like, I've never even heard of Corebridge Financial, and it's the biggest company in the sector, and they're 1.79. East West Bank is, 1.77. So I don't know how this used to be KBE was Keefe Bruyette. This, was in his old banking firm. So 20, 30 years ago. So I would imagine that they had something to do with the design, and State Street just took it over. But if we look at this, for example, and this is why I think it's a good question. All right, so this is the financial sector. Okay, remember, the top of the umbrella is the sector, and then underneath the sector you have your industries, and then you can go into sub industries and so forth and so on. But this is the financial sector, and look at the holdings here. See how this is dominated by Berkshire Hathaway? It's 13%, and JP Morgan is 9%, and Visa is about 8%. So basically, you have three companies that are 30% of this sector, which probably has 70 different companies in it. So that's why Maru is asking the question. Because here we have a situation where one or two stocks could really impact other stocks, because the big stocks could really impact what goes on in the ETF, and then the ETF could really impact what goes on in the smaller stocks. Now, it's really not the same if you come look at the industry. And again, I don't know why, who constructs this or how it's done. The sectors are done by market cap. So Berkshire Hathaway has the biggest weighting because it's the biggest market cap. But here, look at how close these guys all are. So if I was thinking about trading KBE, I would just trade KBE. I don't think I would bother going through all of these. Let's take a look at something here.
Wilmer, do you have your Benzinga Pro subscription with the other school? If you do, you can usually go in there, and if you'll go into the actual address bar up at the top, you can type the name, and the majority of the time the symbol will show up for you. And then a really easy way to be able to do it to where you'll start to just know them is to actually go into your platform and set it to where it shows you the symbol on the screen, like in the background, like a watermark on your chart, and then you'll always get that symbol every time. You can also set the time frame to do that too, so you can see the different time frames across your screen.
So anyway, so that's KB. So yeah, if I was trading KB, I would just trade KB, because there's 100 companies in this industry, and nothing really dominates it. All right, so consumer discretionary at resistance. So what's the question?
Well, she was asking me how you find this, or I'm not even sure, male or female, Maru, sorry. If you don't know what symbols and where to find them, and I was just explaining if you have BZ Pro. Also you can look on Investopedia. You can look on your brokerage website or your platform that you use. They should be able to, it should be able to help you there. And there's all kinds of tutorials.
Okay, so all right, so let's see. So we looked at the S&P, overbought, tech overbought, healthcare overbought. Those are each slightly above resistance. Financials are the key. This is right at resistance. Let's look at our industrial sector.
That's funny.
What's that?
Female today, LOL.
All right. I could say a lot about that, but I'm not going to. All right. So it looks like our industrial is kind of stalling out a little bit here. And then it looks like our communication services, they're kind of stalling out a little bit as well. So in a lot of ways, we're in the same position that we were at yesterday. We're still really overbought. We're at these pretty well-defined resistance levels. I think the bond market is really going to drive what's going on. It looks like oil, actually. Let me just look at the bond market here. So just remember, so you see how right now the bond market is like just really doing nothing, just going sideways. So there's a good chance that the stock market trades inversely to interest rates over the next week or two, because the market's really focused on it. So this 4.54 level is kind of important. If that breaks, that will be good for equities. If it doesn't, and we start to rally up again, then because we're so overbought and we have so much at resistance, I think we could come in pretty fast. So, I'm not saying the market's going to crash or anything like that, but I could easily see over the course of a day or two, 2 or 3% move lower. So if you're not an options trader, right, remember you got your inverse ETFs you can look at. Actually, let's go look at Direxon. Now, it's not like I endorse these guys, because there's other ETF families as well.
Yeah.
But, these guys are, they're as long as the volume's there, then that's cool. So if you're really bearish, you can buy the SPXS. This is an ETF which is designed to move 3 times inversely. to the S&P 500. So in other words, if the S&P goes down 2%, this will be up about 6%. But it goes the other way as well. So, if you're wrong, you're going to lose money 3 times as fast. But if you want to target specific sectors or industries, I should say, I mean, these guys got a lot of different things in here. Bulls, bears. Actually, let's look at energy, see if we can find energy. I know it's in there somewhere. Gold miners, global. All right, so ERY and ERX. ERY and ERX. So I'm going to go look at oil. Wow, look at
that. Yeah.
Oil really. I mean, it's been an interesting thing because with the whole situation in Israel, it's I would have been kind of nervous of taking him out of short position, but like once again, I mean, we see our basic market principles. Here we have our descending triangle, and what happens when we get to support coming out of a descending triangle? A lot of times the support breaks, and that's what happened. So now it's like, all right, well, now we can start looking at oil for a potential long, right? See, we've gotten to this support level back around 78.60 from August. What's a potential way you can play this if you don't trade oil? Well, let's see here. ERX. This is going to go in the opposite direction of oil, or is it? No, this is going to go in the same direction as oil. This tracks the energy sector. So if the energy sector is up by, say, 1%, this will be up by about 2%, and so forth and so on. This ETF is designed to trade inversely to the energy sector. So if oil starts to rally, and I think there's a good chance that it does, and God forbid there's some kind of Israel goes and attacks Iran, oil is going to skyrocket. So ERX could be a good place to be. So that's something I would be considering. ERX. I don't think I would jump in yet, but just start to kind of watch oil, and if oil looks like it's going to hold. Remember, when we get to support, if it's there long enough, some of the buyers who create the support, or some of the traders who create the support with their buy orders, they start to get nervous that other traders are going to outbid them. So they start to increase the amount that they're willing to pay. And that gets us going into this snowball effect. Should we make open, close? Yeah, I mean, there's really no right answer. You just got to, sometimes longer term price levels come into play and sometimes they don't. Like, for example, right here, if you're an oil trader, you really want to know where this recent bottom was, even though it was back in August. If it was right in the middle of this range here, say it was October 26th, you wouldn't really care about this price level. But now that we're close to it, it's important to know that it's there, because if there's no news, and I mean, what's big enough to drive the oil market, the only thing that's going to make this rally off of this level here would be a technical thing. The fact that we've gotten to support and we got anxious buyers outbidding each other. So like I'm just going to pick a random stock. I'm going to just hit H for Hilton Hotels. So now if I'm day trading this is the first place I would start at. Now, what are our longer term levels? Well, down here obviously is one, the most recent kind of bottom. Actually, you know what? I would go right there. Now, I would think that's an important price level. You know why? Let me make it bigger.
The hammer doji.
Mine's going to work out today and use my sledgehammer. I haven't used it in a while.
Nice.
Go beat up this tire that's out in my backyard. All right, so look at this price level 102.40. See how it was like the closing price here was like the higher. So right around 102, between say 102 to 103 has been really important. As a matter of fact, yesterday's low trade was 102.62. All right, so next I would probably look at, we closed down yesterday. So there's yesterday's open. And then here's the prior day's close. So I'll make that a different color. So I'm looking at a chart going back a couple months here to kind of key in on what would be important if I was a day trader. So now let me go to the 5-day chart. See, it's like those, those like Russian dolls where you open up like the biggest one.
Yep.
All right, so now here's 5 days, and we could kind of see what's kind of important, right? And I mean, I probably would add in this right there. See how support there became resistance over there.
Mm-hmm.
And then, I would look at this. Looks like there was a fairly clear bottom from about 11:40 to the close.
Here we go. I don't even know if I can say that right.
All right, then I'm going to go to the 1-day chart.
Matryoshki dolls.
Huh. All right, so now if you look at this and kind of key in on it, you can see where our levels of importance are. Just going back from the past few days. I mean, this is pretty precise stuff. So that's, but, I would say if this thing gets up to around 104, that's where I would be a seller. And if it gets down to around 103.50, that's where I would be a buyer. And I'm not really doing anything magical here. I'm just looking at what price levels are important. And you can even see, like yesterday, we get up to 104-ish, sell off, get down to around 103.50, we buy. So 103.50 was support pretty much all day. Now, if we break below, now there might still be buyers down there. So if we get down to 103.50, there's going to be buyers that look around and say, I want to pay 103.50, but there's other buyers here, so I better be willing to pay, say, 103.60. And you get the snowball effect. Now, if the 103.50 level breaks and we get below it, that's 103.50 there, then there's a good chance it converts into a resistance level because you get the people who bought it who are underwater and are now going to be trying to get out. So it's really kind of just finding your former resistance and support levels. And where are former resistance and support levels? At peaks and at valleys. Think about it. If you get to a peak and people buy and then the stock goes lower, there are people who bought at that peak that are like, I made a mistake. I want to get out, but I'm only going to do it if I get out at break even. So if the stock gets back up to that price, that was the peak, you get these remorseful buyers selling. And if there's enough of them, it'll put a top on the market because it's all about supply and demand. The market's going up because there's not enough supply. If you get to the price level where there's enough supply because you got all these remorseful buyers trying to sell, well, then that would put a top on it. In a former valley or a low, you have people that sold that when the price goes higher, they're like, I made a mistake. I shouldn't have sold. If the price gets back to my back to my sell price, I'm going to go buy my shares back. So if you have enough remorseful sellers placing buy orders at the level that had been support, it becomes support again. So this isn't like magic. It's not like, tea leaves or astrology. And a lot of people think that technical analysis is. And the reason why is because a lot of its practitioners don't really seem to know what they're doing. They don't understand like the basics. I mean, look at this right here. Why did we get resistance at a level that had been resistance before. And it's like I just explained, because you have remorseful buyers who bought back here trying to get out over here. So it's not just like some coincidence or some random twist of fate in the universe that this is where we ran into resistance. And then, I mean, like right here, why did this become a bottom right here? Well, the answer is because it was a top right here. See, resistance can turn into support. Now think about this. There are a lot of people that sold that are like, oh yeah, they thought this was easy and the market went lower. Then all of a sudden it blasts off and goes higher. And a lot of these people who who sold here are like, yeah, I made a mistake. If I can buy my shares back at the same price I sold them at, I'm going to. So if you have enough remorseful sellers placing buy orders, what was resistance can turn into support. Right? So we see this on a lot of our charts. All right, let's just check on the headlines. See what else is going on.
Maru, that was a good explanation. I'm hoping you're taking some notes on that one.
Your pilot has a new job. Blah, 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 blah. Yeah, so anyway, so check this out. So I'm watching UConn basketball last night. National champions, by the way. Okay, comes on at 6:30. My wife and I are watching. 7 o'clock, they go to another game. Can you believe that?
Oh.
And they went to, God, who did they even go to? It was like, like some game. It's like, who gives a rat's ass?
Is that a stock now? Yes.
They're the national champions.
Yes, I know you're the national champions. Trust me, man. UConn basketball has got a legacy that is pretty strong.
Yeah, well, that's why they should be showing the damn games.
Well, you're probably blacked out in that area, aren't you? Does they have an area coverage where local TVs can't cover it, or they want to give it to local television stations?
Well, they should make an exception.
Like they do with football. Well, I'm sure they should, but I'm sure you could probably buy UConn. Dude, you could buy UConn Plus or ESPN Plus, and I'm sure you could get it for like $12 a month.
Man, this kid Klingon, it's like watching like Andre the Giant against other wrestlers. This dude is so they say he's 7'2". He's got to be 7'3", 7'4", and he can sink the J. I mean, he can drop in the foul shots. Like, if he doesn't get hurt, he's just going to be unstoppable.
Shame about that is most of those guys want to get rich. But now, listen, are they able to pay? Well, I guess they are paying all college athletes now. So he should be in pretty good shape in UConn. I'm sure they got a donor class that's willing to pony up to keep him around.
Oh, yeah. He'll be rich. I mean, he could have been rich already. He could have gone pro.
Yeah.
Yeah, so, I mean, this to me looks like it's setting up for a reversal here. Notice we get, just like we talked about, when we get to former peaks, we tend to run into resistance, and that's what happened here. People buy here, and then they try to get out over here at break even. People buy here, they try to get out over here, break even. And then here's people sell here, and then they go to buy their shares back here. People sell here, they go to buy their shares back. And then you get these rallies off of support because you get these anxious traders outbidding each other. And you get these sell-offs off of resistance because you get anxious traders undercutting each other. So, I mean, given what's going on with the rest of the market, and considering that we're overbought and at clear resistance, I would be looking at this for a reversal. I mean, if I was long, I don't think I would sell it until it reversed, because there is a chance it breaks out and moves higher. But just given the fact that we got these big sectors are at resistance, I would think the path of least resistance is to the downside here. I mean, this is overstretched. It's at resistance. So I would look at this as a counter trend trade. All right, everyone. I think I'm going to get going, and got to go work on our lessons. And I guess I'll see you all tomorrow morning.
Guys, thank you so much for joining us today. And if you would like to get the free options course, it's available on the website, or you can email me at education@stockmarketjobber, and I will send you a link directly. Thank you very much.
Yes, I mean, in order to sell a covered call, you must own the stock. Very important. Don't sell a call if you don't own the stock, because things could go horribly wrong if it goes against you. Yeah.
Have a great day, guys.
All right. I'll explain some more tomorrow. All right, Jeannie, Mr. Steven, Abby. Thanks, everyone. Haru.